Hey, TikTok, Jim Malone here, coming to you live on Dallas Trading Floor. It is Thursday, and we're here in Dallas. It is another update for the market. Wow. And Apple seems to be doing kind of the thing that I figured it would do, and that's move higher. So, pretty exciting about that. We're seeing a lot of a lot of movement up. It just seems to keep on going. So there you go. For everybody that's watching on TikTok right now, I'm also live on YouTube at youtube.com/Dallas Trading Floor. And if you want to get the trade alerts, I'm going to show some slides today, and they are available after the show. But you need to go to the YouTube site, youtube.com/Dallas Trading Floor. And this is show number 104. And in the comments, the slides are available. So I'll also put them up on the screen for everybody who's watching on Facebook today, also on YouTube, Twitch, and Periscope. It's pscp.tv/Dallas Trading Floor, and also on Twitch at twitch.tv/Dallas Trading Floor. So let's take a look at the general market direction here. We are up again. Now, here's the thing I'm showing on the screen here. There's basically three kind of market directions. We're in the confirmed uptrend. And in this uptrend, it's basically time to buy stocks. Hey, buy them long. That's what I'm doing. If the market gets under pressure, you'll see this arrow here turn to yellow, and that means that we're in a sort of a under pressure situation. And in that kind of situation, we want to start reducing our positions, getting out of margin if we're in margin, and getting ready possibly to go all cash. And then if the market does go into correction, you'll see a red down arrow, and I'll show you this at the beginning of the show. If we're in that, we don't want to make any new buys. We want to protect our profits and cut our losses short. And typically, if it moves even further down, we want to get into all cash. Right now, we're not in that situation. The last time that we were in that was in the end of February. Through March, the market was down almost every day. And I was telling everyone to go to cash and then to possibly short the market. And you can see those on some of my earlier TikTok videos as well. And also they are archived on the earlier shows of Dallas Trading Floor about 80 or so days ago. So there you go. All right. So let's take a look at the spider. The spider is up. And of course, what the spider is it's the world's largest ETF. It's worth about $220 billion, depending, give or take. It is basically where a lot of people's retirement income is. Right? Retirement savings are in the spider, the S&P, which just covers the S&P 500. This is really the market indicator that really we look at for the relative strength line and other thing. It is up today, up $2. It just seems to keep on going. I mean, I thought it was strong when it got past 310, but it is going up even further. So it's just one of those things. So we don't want to be short anything in the market right now. We're still in an uptrend. It's funny because many of the things that I think may happen later on this year haven't happened yet. One of them is the unemployment numbers. Now, the unemployment numbers did come out today. They were less bad than everyone thought they were going to be. Even though the economy is shut down, we seem to be adding back jobs, which is really, really good for everything. But still, we have a lot of weak sectors. The cruise lines, for instance, is extremely weak. Also, hospitality is weak, as well as the restaurants. Interestingly enough, some of the strength in the restaurants has been moved over to the grocery store. So Kroger and such like that are doing quite well. So it's kind of interesting. As people eat out less, they're eating in more. The restaurants are losing, and the grocery stores are gaining. So it's kind of an interesting time for us there. All right. So the next slide is the QQQ, and this is the NASDAQ 100. This is typically this is where most of the capital has been moving as of late. Now, it's kind of difficult to figure this one out because some of the NASDAQ stocks now are part of the Dow. For instance, Apple, which is up tremendously today, as I was showing you in the the trade alert, because we're now in the upward motion to the stock split. It is there are some very large tech stocks that are parts of the Dow, Microsoft being one of them, as well as Apple. And Apple, as you know, on the 28th is going to be split 4-for-1. So as I indicated in the trade alert, which I hope that you got, I hope that you're taking advantage of this, I certainly am, is basically for every one share of Apple that you own as of the date of August 24th, you will be receiving 4 new shares. So typically, this is a very predictable move when a stock splits, and it can be very profitable to buy. I started my accumulation of the stock basically on Friday after the announcement on Thursday of their second quarter earnings, where they indicated that they were going to do this. They had a blowout quarter, and they announced the 4-for-1 stock split. So that's when I started acquiring position in Apple. And it has gone up a little bit today, and I think it will continue on up until about the 24th or the 25th. The ultimate day probably to sell your Apple for profit, if you just don't want the shares, you just want to make the money, that's probably what I'll do, is on the 27th of August. That typically is the highest day in terms of stock value. And then after it splits, it typically will dip down a little bit. And of course, it's going to be adjusted for split. So every one share is going to be worth 4. But typically there's a sell-off during that period of time, and it moves down. And then about 2 weeks later, after the split, is a good time to buy again, because typically it'll be on its way back up. So that's an interesting way to play Apple, which might be of interest to everybody out there. All right. I just wanted to show you my portfolio as of now, just so you'll get an idea. I'm divided my portfolio into 2 portfolios. I have one portfolio, which is my swing trade portfolio. And that's the main portfolio that I trade. That's the one I've been showing you. And then I have another one that I'm just experimenting with. It's my low-cost, low-price stock portfolio to see how well I'm doing. And maybe if you're interested, trade along with me. For these are very high-rated, low-price stocks that are just breaking out. So this is my swing trade portfolio, just so that you can see it. This is currently what I have as of today. I'm in Apple, of course. I'm also in Tesla. I'm in a company called Audio Codes. I may or may not be in this one. That's an option only. This is an option play that I have on. I'm in Qorvo, QRVO. This is a 5G play. And I've just entered a trade on Lennar. It's a home builder. I'll thought on that a little bit today as well. So I probably, as long as they continue to produce, I'll be holding them. But the minute that they don't, wow, they're gone. And this is my low-price portfolio. This is kind of interesting, and this is basically going to be available through the trade alerts. Basically, I have 3 companies in here that shows you kind of what I have. I've held Blink Charging now for about 20 days. We've had a very nice run up on it. It's about up about 93% over where I bought it, and I bought it at $6.40. And today's price on this was about $12.33. So very nice run up there. I also entered Sorrento Therapeutics as well today. It's up 4%, about 2%, 3%. I'm sorry, 3% since I bought it this morning. And then I just entered a very interesting stock, United Micro. Now I want to explain how I entered them. Typically, the first 2 are basically full positions. And then the one in United Micro is a half position. So typically, when I'm not as sure about it, I will enter with a half position. And what is a position? You take the total value of the portfolio divided by 8. That is 8 full positions. So typically, I like to enter. If I'm confident, I'll enter with 1 full position. If I'm not quite as confident, I'll enter with a half. And then if it improves, I will add to it. So that is my portfolio for the day. So let's take some questions. All right. Thank you, man. All right. What about EQQQ? Interesting. I don't know that stock. So let me go over here to see if I can give you a chart on EQQQ. All right. EQQQ. All right. Let's see if, not recognized. Okay. Well, let's Maybe I have the wrong symbol here. It's EQQQ. EQQQ. I think maybe you're talking about the TQ. Yeah, I think you're talking about the TQQQ, which is a different stock than the EQQQ. So let's look at the TQQQ. This is the play on the index. If the Qs are going up, typically the TQQQ will go up much faster. So let me show you the chart on the TQQQ. I think that's what you meant to say. As you can see, it's moving up very nicely. Now, this can be a good stock as long as the Qs are moving up. Now, when they stop moving up, you want to get out of the stock. This is not a long hold stock. This is, if you see that the Qs are going up, typically the TQQQ will go up 3 times as fast, but it will also go down 3 times as fast as well. So you want to be very careful. Now, there's 2 of these ETFs that basically follow the market. One of them is the TQQQ, and the other one is the SQQQ. Now, let me show you the SQQQ so that you can see that too. If you think the market is going to go down and you want to short the market, but you don't have the ability to short in your portfolio, for instance, if you don't have $25,000 of net value, this is a way that you can do that. So here is the SQQQ, and I want to show you this is the flip side of the TQQQ. So let's look at this chart. As you can see, this is trended way down. Why? Because the Qs have been traded up. So this runs an inverse to the QQQ. But I think the one that you're interested in is the TQQQ, which is the upward. If the Qs are doing well, the TQQQ will do well. But you have to definitely watch this one because this can get away from you, and you can make money, but you can also lose quite a bit of money. So here we go. I'm going to show you the TQQQ again. So those are the 2. As you can see, that's moved up very nicely. It's moving up today as well. So thanks for the question. Very interesting. Hey, Jim, can chart patterns such as the cup with handle apply in intraday trading too? Well, yes, they can. But in intraday trading, here's the difficulty you face with intraday trading. In intraday trading, you are trading against the algos. The algos basically are computer programs that will move a stock based on how it is doing technically. For instance, if it goes down and it hits the 10-day line, well, it might buy. If it bounces off the 10-day line, it might sell. So you are competing when you're doing a day trading kind of thing. You're competing against the algo. So cup and handle doesn't really work that way. In order for a cup and handle really to show that you're going to move the stock higher, you typically have to look at the weekly chart, and then you need to have at least 10 weeks of bars. That's why I always switch to the weekly view when I'm looking for cup with handle patterns. So let me see if I can find a cup with handle pattern that might illustrate this. Let's look at, I think PayPal has one. I'm going to look at the PayPal chart here to see if we've got a cup with handle pattern on PayPal. So I'm going to switch to the weekly view. Yes, we do. Okay, so let me just take a look at the PayPal chart just to show you what a cup and handle is. It's always, for the cup and handle, it's always the weekly chart. And as you can see, there's one cup without handle, and then there's another cup without handle, and that's when it went off, when it went up. Now, as you can see, when you see this chart pattern, that means that it's getting ready to move. Now, this little dotted line here, this is the buy point. Typically, the buy point is at the top of the cup. All right. And when it comes all the way up to there, sometimes it will pull back a little bit. That's a cup with handle. That's kind of like a cocking of the gun. And but it doesn't always do that. Sometimes it goes like this. You want to buy a stock typically at the buy point, either right at the buy point or a tad below it, up 1.5%. That's typically your best and your safest place to buy. So that gives you an idea of cup with handle chart patterns. Anyways, so take the next question. Should we buy more Apple? Wait until, well, here's the thing about Apple. I think you should wait through the split right now. for Apple. I'm going to show you Apple. It's run up a lot, as I figured it would. I hope you got the trade alert on this. It's just how this is absolutely following exactly the chart the chart pattern that I put out, the phases of Apple in terms of the way it's been trading. So I think I might have. I don't know. I don't know if I can pull that up or not. Let's see if I can. Let's see if I. I don't think I can pull that up. But the long story is, I think that at this point it's going to run up and it's going to pull off a little bit. So I think at this point it's probably best to wait until after it splits, because and don't buy it right after it splits. Buy it approximately a week after it splits. Then what's going to happen is on the 28th it is going to split 4 for 1, and then after that it happens, that next week, starting that next week, people will sell off part of their positions. This always happens, and the price will dip a little bit. It won't dip that much because Apple's a tremendous stock, but what will happen is it will dip a little bit, and then as it's dipping, that's maybe when you want to consider buying it. At this point, I would wait until after the split, maybe about a week or so, and then wait and keep moving your limit down, but try to buy it as it's coming out of the low. And the way you can do that is it'll reverse direction. It will be in a downward motion, probably from about Monday to about Thursday next after the split, and then starting about Friday, it should change direction. Buy it on the uptick. Try not to buy it on a downtick, because that reduces your safety. Try to buy it as it's rounding the corner on the uptick. It's almost impossible to call the bottom on these things, but as it starts moving, the way it will trade is that when it splits, it will then start to trade down, and then as it's trading down, eventually it will then start to move its direction to the upward, and typically that takes about a week. And when it moves to the upside, that's when you want to buy it. You want to buy it on that uptick. So you want to buy it on the uptick. That's the way to go. All right, so let's see if we have any. What do you trade the most? This is a good question. Thanks, David. Do you trade options or stocks? Well, I trade both. Here's what I do. If I use certain option strategies around earnings. So sometimes I may not want to commit as much of my capital to trading stocks. Now, you will make more money when we're trading the underlying stocks, but sometimes I want to get the benefit, but I don't want to expend as much capital. And typically that's around earnings time. Here's the way earnings typically work. Even if a stock is very strong, typically, and this doesn't always work. This didn't work on Apple this time, but typically what will happen is, even if it's a strong stock coming into earnings and it has good earnings, typically a stock will fall after earnings. It's just because it's sort of a, buy on rumor, sell on news. And in those cases, I typically like to put on what they call a bull call spread, which is if it moves higher, then I make money within a specific range. So I like to do that. I also, when I buy a stock, I like to sell calls against it just to give a better position, just to give more income to my portfolio. And that's another way I go. But in terms of naked options, I typically don't like to trade naked options because, and I think you'll find this true, if you're buying calls, especially, 70% of the time, if you're buying calls, you will lose money. They will either expire or you'll lose money on them. I like to be selling the calls. That's the way I like to do it. Now, if I'm going to buy anything like a call, and I want to do that, then what I do is I do the spreads. I do either a bull call spread or a bear call spread, or a bull put spread or a bear call spread. Now, what's the difference? Well, in the bull call spread, I have to put out money in order to get into the trade. So that does require a little bit of credit on my part. Now, if I do a bull put, if I do a bear call spread, I'm thinking that the stock is going to go down, then I actually get the money up front. And I actually like those the best. But currently, we're not in a great market for for bear call spreads because the market is moving higher. If the market were moving lower, I would be doing bear call spreads all over the place. You better believe I would. So that's in a long story short about trading options versus stocks. It's not either or. They enhance each position. Trading options can be very profitable, but you typically limit your gain and you limit your risk. With the stocks, you can sometimes get a more of a profit in those kind of things. So that's how it is. All right. So let's see. Also, what do you think about Warren Buffett buying more Bank of America? Warren Buffett loves the banks. More power to him. I guess, there has to be somebody like Warren Buffett out there, because who else would buy the banks? I certainly don't want to buy the banks. I can tell you that. But Bank of America Corp is probably the best deal out of the money center banks. I'm going to show you the chart for Bank of America. I wouldn't buy this chart. I just wouldn't buy this chart. That's me. I don't like to. I'm a relatively short-term trader. My horizon is measured in weeks and months, not in years. Now, if I had 30 years, maybe I could do it that way. But I don't typically buy a downtrending chart. And this is the Bank of America chart right now. As you can see, the 200-day moving average is moving lower. Now, it has moved up lately, but the relative strength is only a 30. That means that that 70% of the S&P is better than this. So why would I want to buy this stock? I don't like this stock. I don't like money center stocks. If you have to be in the financials, here's one I think you want to look at, and that's PayPal. Now, it's been off a little bit, but PayPal is the new money. And I've had a PayPal account for years, but, there's some people that don't have bank accounts that want to be in the financials. If you want to be in the financials, stick with the PayPals of the world. Look at this chart compared to the Bank of America chart. As you can see, the Bank of America chart, it wasn't that good. Now, maybe if you have 30 years to wait, and Warren Buffett is very smart. He has billions of dollars, but he's bought some turds. I'm telling you, he bought Delta Airlines, and then quietly in the middle of the night he sold it. Why? Because the airlines are going to do parable the next 2 years or so, because they just don't have any traffic. I think the banks are in trouble too. Not in trouble, but they just are not going to be that profitable, because with interest rates basically at zero, there's not a whole lot of the best borrowers have all borrowed, and so it's tough to make money. Yes, you can make money on credit cards and that kind of thing, but and some mortgages, but everybody that's refinanced their mortgage has already done it probably. And there are credit card people out there, but most of them have declared bankruptcy, the ones that are new coming into the market. So I just don't see how a bank is a really good investment. But again, he's the Oracle of Omaha, and I'm certainly not in his league when it comes to picking stocks. I would stay away from the banks, period. MGM. This is an interesting stock. Now, here's the problem. Here's what I don't like just anecdotally about MGM, and that is that MGM is in the gaming industry, which normally is a friggin' great industry. But remember, the world is closed down, and we've got COVID, and basically, I think that the way you want to go in this is not with MGM. So let's look at the chart on MGM. This chart is not very good. Okay. Look, we have a downward trending 200-day line. That in and of itself is enough not to buy this stock. It's also only got a 14 relative strength rating. Let me show you a better share that you might be more interested in, and that's DraftKings. Let's see. I think what is it? I don't remember this. Well, let me show you Penn National Gaming. That's the online gamer that I think is better. Yeah, let me show you Penn National Gaming versus MGM. This is probably one you might be more interested in. It's actually moving up, and it has just come into a buy range. As you can see, it's a strong movement up. If you want to be in the gambling space, consider Penn National. It's a very good one, and it's strong, and the price is very right. It's only $43 a share. Let's just compare that one with MGM, and I want to show you MGM real quick here. Oops. I see. Oh, there we go. a little bit of freeze there. MGM. So let's see if we can. Yeah. Okay. I'm going to show you the MGM chart. Now, remember when we looked at the Penn National chart, it was trending up. MGM is trending down. Don't do MGM if you want to be in the gambling space. Penn National, I think that's where you want to be. All right, so can you go over all kinds of stop limits we should be setting on Apple right now? Okay, here's the thing that you want to do with your Apple shares. Okay, if you're in Apple, you want to take the price that you paid for Apple, multiply that times 0.92, and that will give you the stop loss. That is where you want to set the stop loss. You don't let Apple decline more than 8% against you. Now, as Apple moves higher, and it will move higher, by the way, push up your stop limit. Keep pushing it up, keeping about an 8 or even a 5% gap as it moves up. Then when it reverses on you, it will move down through that stop loss. It will sell you out at a profit. So that's how you want to handle the stop loss. When you go into the stock, 8%, and then you calculate that very easily by going 0.92 times whatever you paid for it. That'll give you the stop loss. You want to set that good till cancel, and that will help you preserve your profits. And that's the name of the game. It's let your profits run and limit your losses as quickly as you possibly can. And that's very important to do in the market. Okay, so let's see. I've got some Ultra is my hold. Okay. Oh, Ultra Beauty. Ultra Beauty is a good stock, actually. Let's take a quick look at Ultra Beauty. That was a question from somebody on TikTok. ULTA. And let's look at Ultra Beauty. Oops, let's see if I can get Ultra up there. And by the way, it's actually this is a Dallas company. I think it's ULTA. That's right. It's a Dallas company based in Denton, Texas. Okay, Ultra Beauty. Yeah, it's been trending down a little bit. I don't know. You might want to consider possibly bailing out of this one because we do have a downward trending 200-day moving average. That is the tell, folks. If you see that 200-day moving average like this, moving in the downward way, you probably don't want to be holding it because that shows that it's got momentum to the downside. So there was a cup and there was a failed breakout, and then it broke down. And typically, here's the thing: when it comes out of a cup or a cup with handle, you'll see this cup, and then if it is a successful breakout, there will be a very large blue bar here, which is increase in volume. But if there's a red bar like this, which is up beyond the average, that means this chart pattern is breaking down. You want to bail on that puppy. So I wouldn't be a long-term holder of Ultra right now. I just don't think it's a winner. All right, RTK. Let's look at RTK. This is interesting. I don't know RTK off the top of my head. RTK. Oops, is that right? Yeah, RTK. I don't see that symbol RTK. So I didn't recognize it, and the computer didn't either. So there you go. Okay, what do you think about audio codes? I hope it will go up some. I'm still holding a bull call spread on this. I hope I don't have to close it out. I made a mistake on audio codes, and that was when you do the bull call spread and it's right before earnings, sell the day before earnings. And I know that, and I didn't do it because I got too busy. And this is the problem. You got to make sure that you don't trade too many positions, or sometimes you forget to close your positions. And I did on this one. It still looks fairly decent. It's got a cup with handle. It has moved down from that. It's got a failed breakout. So hopefully we'll see a little bit of breakout here on audio codes at about 40. So I'm holding it now. I'm within my ranges, but it's definitely not doing as well as I would have liked to have had it done. It's just one of those things. So I don't know if it's going to move up on that. Okay, Fastly is so high. Okay. Fastly is interesting. Let's see. Get that FSLY. Okay. Let's take a look at Fastly here real quick. FSLY. All right, Fastly Yeah, this is like, ooh, look at that. Okay, it has a yeah. This, folks, is a sell. This is, folks, is a sell. Sell fastly. We had the chart pattern has broken down. This is why you want to have those 8% stop losses on it. You see what happened? It came out of there, and then boom, it gapped up, and then it moved down hard. And we have high volume on the movement down. I think you don't want to be in this one. We're after earnings. I think that if this might be one you want to get out of. I don't know if, yeah, I think it's probably going to go a bit lower, but depends on whether or not it holds the 50-day moving average. It's still above the 50-day, so it's pretty good. So, possibly get ready to get rid of this one if you're looking at it. It moved up a little bit too fast. It may settle at the 50-day line. If it does, then you're okay. If it breaks below the 50-day line, then I think you got to sell it. But right now it's a hold. That's how I'm reading the chart. Okay. Did you? Oh, did anyone see Facebook? Facebook has been moving. I was thinking about doing a play on Facebook. I want to see Facebook. They blew out their numbers. They did extremely well on their earnings. It might be time to be into Facebook. I'm going to look. Yeah, it's absolutely the topper. It's just getting ready to break out to another level. It looks like. Let's look at the daily chart on this. Yeah, look at this daily chart. Very nice daily chart. This is the chart on Facebook, and it looks as if, yeah, we had a very nice breakout here above 250, 265. If it moves to this green zone here, then we're in a new level, and we may have a breakout. There's very strong buying action. Yeah, this one's definitely a watch list. I wouldn't necessarily buy it today. I'd wait to see if this thing settles back at about 260. Maybe it'll move higher, but I think that this one probably is going higher based on what I'm seeing in this chart. If you didn't get the breakout, here's the thing: don't chase them if it's breaking out. Just don't chase it because it could lead to. But wait a little bit. Usually it pulls back, and that's the time to buy it. But I think that this should be on your watch list. It's definitely on mine, Facebook. Okay, so what do you think about ALIM? I don't know ALIM. Let's look at the chart on it. ALIM. That is Ultimate Scientist. This is a relatively cheap. I don't particularly like this chart. Okay, for everybody out there, this is something that you might want to look at this chart. The first and foremost thing that you don't want to do is buy a downward trending chart. Unfortunately, this has a downward trending chart. Now, it looks like it may have shown a little bit of strength. There was a big buy today, so the volume is up, and it's definitely moved potentially into a buy zone. But you know what? I just don't like this one. I just don't like the overall trend of this right now. It's $6.80. I think you want to wait on this one possibly until it gets above about $9.50, and then if it shows strength at that point, then you possibly want to get into it. I wouldn't necessarily go into this one. It just doesn't look like a buy. It just doesn't look like a buy on this one. Okay. The Trade Desk, one of my favorite stocks. This is a very expensive stock, and by the way, this is an interesting company. Facebook and Google, of course, dominate a lot of the online advertising placement. But there's another company out there called the Trade Desk, which allows people basically to place ads. And this is a tremendous stock. And look at it; it's very nice. It's moving right up the 40-day average. It's definitely got the right kind of momentum. It's got a 95. Yeah, I think this is quite good. I would wait until we have a base pattern. The last buy point that we had, let me see. Yeah, the last buy point, wow, we had is way back in 160. It's doubled since then. Yeah, it's 33 weeks since its pivot, and it's up 75%. So I would buy this one until there was another base pattern. But this is definitely a watch list stock, and it's a good stock. It's just that I don't think this would be a good entry point for this stock. It's just too high, and without a base pattern, it's a little bit too risky to enter the stock. So there you go. You like CZR? I don't know about CZR. Let's take a look. CZR. Right? Oh, Caesars. Caesars is actually not that bad. I'm surprised because I typically, right now I'm not a big fan of the gaming stocks except for DraftKings and Penn National. This is better than the MGM chart, I can tell you that. And it's got a 79 relative strength, so that's good. This isn't bad. It's fallen, but it fell below the 40-day moving average, but boom, it went right back up with pretty good conviction there. Did it just go through earnings? Okay, it's due for earnings. Yeah, don't buy this thing prior to earnings. Wait until it goes through earnings to see if it comes out on the other side. But this might be a watch list. This is the kind of thing that you got to learn how to learn. And unfortunately, usually you learn the hard way on this one. Don't buy stocks like this prior to a day or two or three before earnings, because typically they run up before earnings, and then even if the earnings are really good, they'll fall off. So wait until this one comes through earnings. It looks like it's on the 9th is when it looks like they're reporting. So wait until this thing reports, and you might have a winner. But this is probably a watch list stock on it. Funko. People really like Funko. It must be big on. I gotta get on Robinhood, because some of these stocks I don't know if, Funko people really seem to like. I don't really see the benefit on Funko. Yeah, this is not a good chart. This is kind of a bad chart. Let me show you the chart here. It's a downward trending chart on Funko, so it's not so much fun if you have this stock, because you don't want to see that. Even though it is moving up a little bit, it's only got a 16 relative strength. So I think you might want to go, if you're going to go with something that makes toys or something like that, look for something that's more fun than Funko. This is not a fun stock, and I don't think you're going to make fun money on it. You're probably going to lose money on this one, Funko. So not me. I know that there are people on the internet and on TikTok that just think Funko is the greatest thing ever, and good, and more power to them. I hope they make money, but I don't think they're going to with a chart like that unless it changes. So let's see about NET. See if I can get a good chart on this. That's not. It would help if I spelled it right. There we go. Cloudflare. Yeah, Cloudflare's not a bad chart. It just announced, right? Okay, no, it's on the 6th. It announces today. Good call. Don't buy this one until after earnings, but it looks pretty good. It's relatively short period of time. This is sort of an IPO. It's got 1, 2, 3. You don't want to ever buy an IPO unless it's at least been aged for 3 months. It's just too dangerous. Yeah, this one, if it reports well, it's a little bit off. Looks like after hours. If this thing shows some strength and holds the 50-day line, then I think you might have a good winner on Cloudflare. So thanks for that. I really appreciate that tip. I'm going to put it down here, NET. And that's Cloudflare. All right. And thank you very much for that. Okay, so let's see from, thanks. What about CCS? CCS. I don't know CCS. Again, some of these I know off the top of my head, but CCS is now some of them. Century Communities. Excuse me. Single family. I'm liking this very, very much. Yes, this is a good one. Let's look. I want to do a little bit more research in there. I have an option play on Lennar, which is sort of in the script. Century Communities. This is a very good chart, and I like the sector that it's in. I will be honest with you. I really like this sector because they're a new home builder in Colorado and Texas, and those are fantastic markets. It's got a relatively good capitalization, right about 1.2 billion. Wow, that's pretty good. Yeah, this is a very very good stock. I'd like to do it's coming. It came out of the buy point on this one. Let me see what the buy point is. is 32.60. Wow, it's right at the buy point. Look at that. It's right at the buy point. Yeah, this is a buy. This is a buy. Very, very nice. Very, very nice. I want to do a little bit more research on this before I completely say that this is a buy, but this looks very good. This looks like a very good stock. And I like the chart. It's moving, well, it's higher high. It's got very nice relative strength at 89. It's in a very good sector, which is home builders. It's got lots of nice volume increase. It's owned 58% by funds. That's good, over 50%. I would say this is a buy, and you might want to buy it. You might want to put this either on your watch list or on for a buy. I would buy this on an uptick. Very good. It's right at a buy point. So thank you very, very much for that. I'm going to put that on. I'm going to do some more research into that one, and I was not aware of that. So thank you very much for that. Appreciate it. Okay, I recently purchased. Just a few minutes based on the COVID news, but never had success. Okay. Okay. Here's the thing about pharma trading, and here's the thing about story stocks, and this is a tough go. It's true, the COVID-19 thing is big. A lot of people got hype from Moderna and stuff like that. I actually had Moderna on a few times, but the problem with buying on a complete story is it either could go against you or for you. The problem right now is that the pharma industry is running into some difficulty with the COVID-19 type of stuff. Johnson & Johnson is not doing it very well. The thing about this COVID-19 thing is I don't think it's going to be that profitable for them. The most profitable pharma stock that I know of is BioMarin. And that one is not even in the COVID thing. So, what I would do on this is I would look to transfer some of your money. I did find a really good, I want to show you one that I have in my low-cost portfolio that I'll show you right now, because I do have one that I did buy, and I in that pharma area, but it's a very inexpensive stock, and I just bought it today, and that is the Sorrento Therapeutics SRNE. I think that's SRNE is the symbol on it. Sorrento Therapeutics. Let me see if I can get you a chart on Sorrento. To give you a chart on that. So let's see. SRNE, I think that's it. Yeah, Sorrento Therapeutics. Okay, so there we go. I'm going to show you kind of the general idea on Sorrento. It's down a little bit today, but I did buy it for $13.03 today, so I'm still in the money on this one. This is one that I do like in the therapeutics area. It's down a little bit after. Well, it's even after ours. It's coming up. It's not number one in its category, but then it's a very, very inexpensive stock, and it's got a composite rating of 94. So if you want to be in the biotech group, and this is a notoriously tough group to buy stuff in because there's so many companies and they're so binary. But there is a good way to play this. It's with an ETF called the IBB. So yeah, and it's with a thing called the IBB. So EBS is the number one in the group. So here's the thing about the pharma stuff. That is a very, very hard area to play in. I do buy in this area, but I only buy for a limited portfolio. And right now, the only portfolio that I have it in is my low-cost portfolio, which I've been putting out there. And hopefully I'm going to be developing that more. It's basically, I took about $6,500 of spare money that I had sitting around, and I'm going to trade that to hopefully the best I can. And I'm going to show everybody the results. So by the way, I will be doing updates on that. So if you want to get on the trading alerts list, it's dallastradingfloor.com, and just to sign up, it's all free. Also, if you are on if you are on TikTok, the easiest thing to do is to just go to my profile, click the link, and you'll be taken right to the sign up page for the trade alerts. And in the trade alerts, you can find out how I'm trading it and some ideas. Also, if you want to ask a question, just go to DallasTradingFloor.com, type in the question, or if you're on YouTube, Facebook, Periscope, or Twitch, you can actually type in the question. I'll try to answer them on the air as I can. So thanks again. So let's go back to the questions. All right. Mobile iron. Okay, this is an interesting one. Mobile iron seems to be down. Yeah, seems to be down on a downtrend, but possibly buy if it reverses. Well, good question. I had mobile iron on yesterday. I decided not to buy it based on a number of things that I was seeing. But let's look at the chart for today. MOBL. What I did is I instead bought United Micro, which is a Taiwanese company very similar to a Taiwanese company very similar to Taiwan Semiconductor Manufacturing. Was very cheap, and it's done fairly well. This is the chart for mobile iron. Unfortunately, I had the Century Communities up. There we go. There's the chart for mobile iron. You know what? It's down. It's back into the buy zone. If it holds this buy level here, which is about looks like about 550. Let's see if I can find exactly the buy zone for you. Yeah, we're right at the buy zone right now, and it is 537 is the buy zone for this. We're at 562. We're definitely in a buy zone right now, and I think that mobile iron may break out of this. So it looks fairly good. Did it just go through earnings? Yes, it did. Okay, this is very common. One of the things about this is very common. This is why you don't want to buy a stock into earnings. And I keep repeating this, but it bears repeating, because basically what happens is it runs up before earnings, and then if the earnings are good, even if the earnings are good, sometimes it backs off. That's definitely what's happened here. Wait about a day or two, see if this thing starts to move higher. If it does, this is probably a buy. I think so. And it's a very inexpensive stock. So I wouldn't go in with a full position. I'd only go in with a half or a quarter position. What do I mean by that? Well, if you have a $10,000 portfolio, you divide it by 8. That gives you $1,250 for each position. You don't want to go in with more than about a half position on that. So for this, if you were to go in with a half position, you'd be going in at about 100, maybe 120 shares on this for a $10,000 portfolio. And the reason is that this protects you. But I think that with this mobile iron, I think it is a good stock. It's showing good chart good chart action. The 40-day just crossed above the 200-day. That's very bullish, and it is in a buy zone. So mobile iron might be a buy if it can hold the buy point, which is about $5.37. So if it holds the 537 tomorrow or the next day, you might want to buy this one. But remember, when you go into a stock like this, make sure that you set your stop loss at about 5% below. I'm sorry, 8% below where you purchased it. So it's going to be a fairly tight stop on this one, but you definitely want to put a stop loss on this one. So pretty cool stock, mobile iron. I've had it on my show. It's been I still like it. It's gone through earnings. This is more of tactics rather. What I'm talking about here is more tactics rather than the stock itself. I think the stock itself is a very good stock. I think tactically you have to buy it at the right time. Typically, as it comes to earnings, typically is one of the better times if it can hold. If it can hold the buy point. Your thoughts on Atom, ATOM? So let me look at the Atom chart, ATOM, and see what we have there. Another interesting, relatively low price stock. This doesn't. It looks like a double bottom, but it doesn't. I don't know. This is a tough one. This is a tough one to get because it's kind of all over the place. Let's look at this, kind of analyze this. Yeah, funds are only 7% in this. This is very Los Gatos. Okay, re-engineered silicon films. Which okay, huh? Well, I like the area that it's in, but yeah, I don't know about this market cap 220. Yeah, I don't know. I don't see. It does have a good chart though. Its relative strength is 98. It's above the 200-day average. I just don't see a. This is a watch list. This isn't a buy, but this is definitely a watch list. Let's look at the daily on this one. ATOM is this stock. I like the semiconductor manufacturing space. We're definitely in a super cycle for semiconductors, and that's a good thing. So this is not an immediate buy. This is a watch list stock. That's how I would characterize it, but it's a good one, and it's in a good area. So thank you for that. Rocket companies, RKT. Is this RKT? All right. Let's see how. Yeah, rocket companies. No. There's not enough. There's not enough information on the stock. Stay away from this. Wait until we see something. Wait until we see something on this one. This is a pump and dumper. Yeah, it's got up strongly. It looks like it just came out of the chute. It doesn't have any cash flow. I don't even know what they do. Provide the simple solution is going to mortgage. Oh, this is Rocket Mortgage. Okay. Yeah, I don't know. Sounds like a spinoff from Quicken Loans. Yeah, put this on your watch list. Wait for 3 months. See what it does. Interesting. Rocket. So this is Rocket Mortgage. This is Rocket Mortgage. It looks like, yeah, and it just must have just IPO'd. RKT. All right, I wouldn't buy this one. It's out of the box, but and it may amount to something, but right now it's too soon. Try not to buy a IPO when it comes out. Try to wait at least 3 months, because typically the way an IPO works is they'll come out and the holders will sell it into the market to a lot of retail investors. It will then go down, and then the retail investors will get discouraged. They will sell, and then the big boys will come back in and take the stocks back at a lower price. So I don't think you want to wait about 3 months to see if this thing has legs. Rocket Mortgage may be very good. It's in a relatively good space, but I just don't think you want to be in it right now. mRNA. Let's see, mRNA. Okay. Oh, Moderna. Okay. Interesting chart. Interesting chart. Okay. This Moderna is a bet the farm. Okay. Now, here's the thing about Moderna. If Moderna, if they come out with the vaccine, they're probably going to be tremendous, but they may not. Now, there's some controversy on Moderna. I think this may be a short. Now, why would I say this is short? Well, here's what's happening. There is apparently the FDA has been manipulated somewhat for emergency use authorization for vaccines, and it looks as if Moderna's product Remdesivir is in trials now to be approved, but it looks as if it is not going to be. It looks like it looks like hydroxychloroquine is cheaper, and it typically works better as a preventative measure. So there's a lot of controversy. I think Moderna apparently has been lobbying the FDA very, very strongly to get to freeze out hydroxychloroquine, which of course is off patent. So I think that this may be a short. I would be very careful buying Moderna at these levels, and as you can see, it's already starting to move back down towards the 40-day moving average. If it falls through that, which it may, because I'm looking at this chart, it may fall through that line. If it falls through that line, sell it and run, because it will drop like a stone. So it might do well, but that's a very high risk bet. I wouldn't be in it. Any recommendations for a $500 investment? Well, actually, I want to show you something, Thomas, and I'm starting this thing, and it's not quite $500. That's a very small portfolio to deal with. But I started out very small too back in the day, and so I'm starting a new thing called Jim's Low Price Stock Portfolio. And the idea behind this is to find relatively inexpensive stocks that can be bought and possibly profited from. So here I'm going to show you on the screen Jim's low price stock portfolio, and I actually have several things that I've done okay in. Now it's a little bit more than you have, but I bought 100 shares of Blink Charging back about 20 days ago for $6.40. It's currently trading for about $12.33. I did pretty good on that one. I'm up about 93% in 20 days. That's pretty good. And I then entered this one this morning, Sorrento Therapeutics. I only bought 61 shares of that because I wanted to maintain a one position. I didn't want to go more than one position. And I'm up a little bit on that one today, about 3% up today. And I'm also up on this one called United Micro. Now, can I guarantee success in a low price stock portfolio? Not on your life. But if you chose the stocks correctly, you sometimes can do fairly well in a low price stock portfolio. Now, you have to be very careful on your stops. So in answer to your question, the best way is why not sign up for the free trade alerts? And I'll show you that right now. That's basically at our free trade alerts are www. Dallas Trading Floor. Just fill out the form, and it is totally free. You can unsubscribe if you like, anytime. And if you're watching on TikTok, it's also available on TikTok by going to my profile, hitting the link, and then you'll be taken right to the page where the sign-up page is for the trade alerts. So this is my kind of a new thing. It's called Jim's low price stock portfolio, and currently I have 3 stocks in there: Blink Charging, and then Sorrento Therapeutics, and a company called United Micro. 2 of the stocks I bought today, and hopefully I'll be updating this as we speak. I'm only going to have 8 positions in this. Currently, right now, cash is my biggest position. So I'm just kind of waiting for the best things to come along, and then as they come along, I'm hopefully taking advantage of them. And I'm going to try to show everyone how I'm trading, so maybe you can benefit some other people too. All right, let's see. What do you think about AMD? Well, AMD is a great company. I will be totally honest with you about that. And it had a very nice chart pattern. We may be too extended though right now for AMD. I'm just going to kind of take a look at see how AMD is trading currently. Let's see if I can bring this up for you. Yeah, boy, look at that. Very nice. I'm going to look at the daily chart on this. Now, normally I'm looking at the weekly chart to see kind of if it's ready to go. Boy, it has really taken off. It had some stellar earnings. By the way, this is the EPS. This is the earnings. It was up 125%. It's just moving higher. The only problem here is that the buy point on AMD is about 59, and we're already at 86. So here's the problem with buying AMD. It's a riskier buy. You don't probably want to buy it at this point. You want to wait again until there is some support. It might come down. If it came down and held about 77, there may be some support there. It may be developing, but I don't think you want to buy this until it comes back into a chart pattern. It's a little bit extended. It's a little bit risky to buy AMD now, but it's an excellent stock, and it's probably going to go higher. So, yeah, that's my take on it with AMD. Great stock. Okay, so let's see. Invest in pins. Oh, okay. Bid into Apple today for this split. Good for you. Good for you. I've been recommending Apple, as you know, in my action trade alerts. I put that on Friday on how that's going to trade. And if you're interested, I could probably reissue that action trade alert. The way Apple is going to trade is almost all splits trade this way. Stage 1, of course, is the pre-announcement. And then you come into the day it announces. That was on Thursday of last week. and then it typically trades up very quickly. Then that's sort of and then it'll back off a little bit. It's been backing off basically basically Tuesday and Wednesday. Now it's moving back up. It's now going to ascend. This is probably a good time if you want to get into it. Today, and of course we're after hours today. Maybe tomorrow, maybe on Monday, but then it's going to start its descent, and I do believe it's going to move higher until it gets to August 27th. That probably will be the top day for it to, because typically right before the split it moves down a little bit, and then after the split, that Monday after the split, that's when there's a sell-off and it typically moves down. So I think you might be able to get a bite of the apple still, and I don't think you're going to be disappointed on Apple. I really don't. I think the split is going to do very well for you, and it's a very good company anyways. And I have no problem recommending buying Apple at this point to this time in the week. So there you go. All right, Long. What do you think about Etsy and Lululemon? Let's look at Lulu. This is a company that I don't understand. I'll be honest with you. My girlfriend understands it, but I don't. I don't understand Lululemon. I don't have any Lululemon products. She does. She has some yoga pants. It's very nice, especially to look at. Yeah, this is currently in a buy zone. Wow, unbelievable. Let's look at it. This is currently in a buy zone. Wow. What do you know? It's definitely in a buy zone. It's off a little bit today, so this is definitely buyable. This actually may go higher. I cannot believe this. Wow, I'm certainly not in this. My only concern, of course, is that it isn't strongly being acquired, but this is a good stock. This is definitely in a buy zone right now. Lululemon. So go figure. I guess yoga pants are big. What can I say? All right, please reissue the Apple trade alert. Okay, I certainly will. Are you on our? Make sure everybody before I'm going to reissue the Apple trade alert to give you an idea of how to trade it. What I will do is I'll send it out to everyone again, and but just make sure that you're on the list. And the way because I use a mailing program, and sometimes it gets into the trash on that, which I hate, but just make sure that you're on the list. Just go to DallasTradingFloor.com, and there's a sign up right on the front page, and just make sure that you're in there. It's really important, or else once I hit the button, I can't kind of go back. It sort of sucks, but I'm trying to figure that one out. So make sure that you're on the list for the trade alert. I will reissue the Apple trade alert. It is a very good opportunity, and I'll put a note in there to change that up a little bit so that you can all sort of see the second trade alert on that. I'll probably be coming out tonight, maybe at about 7 or 7:30. So I should have it out for you. Also, everybody on TikTok, easy to get onto the flash trade alerts. Super easy. All you have to do, go to my profile, hit the link, and it will take you right to the sign up page. So I have the last two questions. Oh, what about Etsy? And I am on the list. Just said fantastic. Okay, great. This is the last question I have to take. This is the one on Etsy. Let me see if I can give you an answer, a coherent answer on Etsy. I do like it very much, and along with Shopify. I think this is a winner. But I just want to look at the chart. I like this. I don't like to. I like to look at the chart first. Yes, TY. Okay. Is it not giving me the? Let's see. ESTY. Huh. Okay. Let me see if I may have the wrong one here. So let me look if I can bring up Etsy. Well, I don't. Let me see if I can get the right ETSY. I apologize. That's my mistake. ESTY. Sorry about that. ESTY. Is that right? ETSY. Sorry, ETSY. There we go. All right. Thank you for bearing with me. Okay, here's Etsy. God, look at beautiful stuff. It does have it does have some sell off here. Did we just go through earnings? Let's see. A+ rating, funds are only 69%. This is just excellent. Wow, 130. Let me see if there's a buy point on this one. See if we can give you a good buy point. No, I can't really give you a buy point. You know what? If it comes back down to the 40-day, then you might want to look at it. If it bounces off the 40-day, I would see. Well, God, this is really tough because it moved up today. If this backs off a little bit and bounces, I think you want to buy it. This is a very strong chart, very, very strong chart. So, sorry to be so confusing. It is a little bit. You'll get the hang of this on this Etsy chart. Basically, it's a strong chart because the 40-day moved above the 200-day. That's bullish. And also, most recently, you've had very strong up volume. So this is a very viable chart, Etsy, ETSY. Well, thank you, everybody. Thanks for bearing with me. I'll be on tomorrow, same time. If you want to sign up for the trade alerts, they're available at dallastradingfloor.com. And if you're on TikTok, just go to my profile, hit on that, and you'll go right to the sign up page. I will see you all tomorrow. Thank you so much, and I will be talking to you soon. Okay, and for everybody on YouTube, Facebook, Periscope, and Twitch, I have one last question. Will Apple come down to your entry on Apple stock on the split trade? It seems to be moving. Well, here's the thing. I'm going to show you the general trend on this. On the action trade alerts, I'm gonna reissue the action trade alerts that I had on this on Friday on how to trade Apple, and you'll kind of get the idea on it. So make sure that you're on the list. And it's dallastradingfloor.com. Just sign up. Make sure you're on the list, and you'll get this. I will send it out. It'll probably be out by about 7 tonight. So I'll show you that at that time. I got to take one last question. EOG. Let's see if I have anything for EOG. EOG. All right, EOG Resources. Ooh, not a good chart. It just had earnings. It's due. Yeah, no, you don't want to buy this one. I am so sorry, especially if you're in the oil patch. This is not a chart you want to buy. You want to stay away from this one. It's in a bad sector. It's got a bad chart. I hope they did okay on the earnings. No, you don't want to be in this one. I'm sorry to tell you this. The last buy point on this was basically wow. It was back in December of 2018 at about 125. It looks like that was the last buy point. I am so sorry if you are in the stock. If you've lost more than 8%, rip on this one. Take your capital, and hopefully we can make you some money somewhere else. But don't buy this one. Sell this one if you have it. It's not, it's just, not trying to be negative here, but this is not a good one to buy. But if you want to find ones that I'm buying that are good to buy, that I will show you are good to buy, then get on my action trade alerts at www.dallastradingfloor.com. And again, thanks everybody for coming by, stopping by. Please tell your friends about us. And we're going to be on tomorrow, same time, and hope to see you then.